Okay, so right now it's about 9 o'clock Eastern Standard Time. We almost finished the UK election. I know not a lot of people are watching this event. It's obviously not that excited, especially, it's not the first election. It's been kind of like a bad drama for UK since this whole thing has been so long. But the result was that the Conservative Party actually won a very, very large seats. So most likely, Brexit is going to be real for this time. Next January, I think UK is really going to leave the Eurozone. So what does that have to do with us? I would basically just like to show you that it's very important to understand what affect the market. It's very important to read the data and all that, but there's nothing gonna affect market more than the government and central banks. Okay, these two are going to affect. I'm not only talking about a forex market. I'm talking about equity market, about real estate market. These two are going to be the most major deciding factors for any market. So basically, when you have anything to do with the government, like today you have a UK election. In terms of US, people will always like to laugh at the president because he likes to tweet a lot. But believe it or not, that those tweets or the comments really affect the financial market more than any other data. So anything to do with the government and anything to do with the central bank. So let's take a look at the chart. If you look at the British pound and US dollar chart, you can see that, look at that. This is about just in the afternoon here, and the result come out like, right now, it's 9 o'clock Eastern Standard Time. I think it come out about 4 o'clock, so it's about here. What I want to show you is that in last then an hour or two, we have almost 500 pips. That's a lot of movement for a currency. So that just show you a simple event can have drastic result. Now, yesterday we have the FOMC meeting from the Federal Reserve. Now, if you take a look at that, if you only look at the data, you'll see that, the interest rate was unchanged, but we also have a big movement for US dollar. So if you take a look at euro dollar, you'll see the same thing. That is a big weakness into the dollar, and in a way that boosts the euro. So all this has everything to do with the central banks or the government, and that's how you really understand a basic knowledge of the financial market, and that has a lot of correlation with the equity market. Because if you look at the equity market, it's exactly the same thing. We have a very strong equity market today, yesterday, all the way from Asia Pacific, European market to the US market. So exactly the same thing. It's all because right now the interest rate, as according to the Federal Reserve, they are not looking to raise interest rate anytime soon by 2020 or even 2021. And remember, the beginning of this year, they are raising interest rate, and the market, everybody was thinking that they will keep raising the interest rate because the unemployment rate is at all-time low. We have a very strong job market, and that will cause inflation to go up. However, that was not the case. So basically, the money still remains cheap. And that has something to do with the real estate market as well. Because if you follow me on Instagram, you'll know that I show you the November Toronto real estate report. And if you just have a quick glance, you'll see that this whole report is like 27 pages. If you're interested to see the details, just message me. I'll be able to. We can talk about it. But just a quick glance, you'll see that the sales from this year, this November to the last November, we have about increasing sales 14%. The new listing, however, is the decrease of 17.9%. Active listing also decreased minus 27%, but the price, the average price went up 7.1%, and the average day on the market also went down negative 11%. So what does that mean? That means we have a strong sales, you have a lower active listing, a higher price, and lower days on the market. Basically, you have more demand and less supply. Now, if you're talking about market in any sense, there are only one rule, that is supply and demand. And it's a very simple concept that even a 3-year-old understand. If you have more supply, less demand, the price goes down. If you have more demand and less supply, then the price goes up. And it works in anything. That's why people have like additional limited edition. That's why when you want to buy an iPhone, you have to line up if you want to get the newest iPhone, because it's not in stock, right? So same thing for the housing market or any market. Again, supply and demand. In terms of housing market, the inventory, do we have more houses or do we have more people? Do we have more people want to buy a house, or do we have more houses than people want to buy? And right now in Toronto, we have a shortage of housing, right? We don't have enough house, but there are more and more people looking to move in. So that's one thing that's very important for the housing market. That's why the price keep going up, because we have more population, more people coming this city, but we don't have enough house. And that's why when you're looking at the pre-construction condominiums, there are more and more building deals coming up next year. And the builders are all looking at this kind of data, because to finish a building, it takes 5 to 7 years or even longer. They're looking at the market trend. They're not looking at that single month. So if you feel like there are more and more building constructions in the city, that means they predict and anticipate that there are going to be more and more people. So that's the first thing, supply and demand is in terms of housing inventory. Second thing is money supply. Is the money cheap or expensive? And that has everything to do with the central bank. And that's why I'm saying that if you trade the market, doesn't matter what you do, equity, real estate, currencies, everything is tied together to a microeconomics. If you have a cheap money, then you will boost the economy more, because it's easier to borrow money to do investment or to buy a house. And who decide whether it's expensive or cheap to borrow the money? The central banks. Why? Because they control, first of all, they control the interest rate. And second thing is they control how much money is going to be flowing in the market, right? In a very simple term, they can print the money. So the more money they give to you, the cheaper it is for the money. So the interest rate and the money supply is a lot nowadays. So that means it's relatively easy to borrow money. And that's the second thing. The third thing is the supply, the demand of people. Do we have more people wanting to buy a house? And the two other factors that you can do is to go to this website, as I mentioned before, the Trading Economics. So Trading Economics is a great website because you can just go into specific country. Like for example, if we click Canada, and you can see all their financial data. Now, again, there's so many things to look at. So what I want to point out is, first of all, looking at the unemployment rate. Because if you have a very strong job market with an increasing population, like in Canada or in North America, what does that mean? It means that you're going to have more people and they all have jobs and they all want a house. So they're going to buy a house and they're going to make the housing price to at least steadily growing, right? And if you look at unemployment rate in Canada, and remember, when you look at this chart, you always have to zoom out to the max, because then you have a better criteria. So if you're looking at the job market from 2000 to right now, the past almost 20 years, it's pretty much lingering between 5%, 6% to about 8%. So that's all like normal range, right? So when you look at this, you'll know that okay, we're still at a pretty healthy job market. Actually, we are at the lower end of it. So that means the unemployment rate actually going lower. So that means the job market is pretty good. You have enough population coming into this country, and you also have enough jobs for people to have. And then again, when people have jobs, when they make money, they will need a housing, or they want to move into a better place. And that's why the housing price continue to go up in Canada, especially in Toronto. Now, the second thing you want to look at, as I mentioned, is the interest rate. So if you look at the money supply and you look at the interest rate, and again, you want to zoom out to the max, you'll see that people will keep saying, oh, interest rate is going higher, higher. If I zoom out right away, you'll see back then in the history, interest rate goes as high as 14%, double digit. And right now we are really, since 2010, pretty much since the financial crisis, we are still at a all-time low interest rate. So that means money is still relatively cheap. So you have a good job market. It's relatively easy to borrow money. That means you have more demand, you have good supply of money, and if you don't have good supply of house, that's what's going to drive the housing price up. So again, I try to tie everything together because you can trade different asset class. You can focus on stock, you can focus on real estate, or you can focus on currency, but the theory of what's driving the market behind is all the same. And I used to, like, I didn't have this knowledge before. So when I was doing something, I always feel like, oh, it's so complicated. I have to learn stocks before I trade currency, and now I have to learn how to do real estate. But essentially, everything to do with the money market, the financial market, is all the same, supply and demand. So it really helps you to increase its knowledge if you basically broaden your horizon, like you're trying to understand different market. And again, you don't need to have too much of a deep knowledge, but you just want to at least understand what's driving the market. So as I mentioned, if you just show you this few data, you'll see that we have a very low interest rate, we have a good job market. Now, if you're going to go to Canadian census, you have increasing population, and you go to real estate board, like Toronto Real Estate Board, you realize everything is reflected, is interconnected. We have lower housing supply, and that's what's driving the price up. Another thing to show you is that when we're talking about this kind of data, remember you always want to have a long-term view. It really depends on what you do, but if you want to buy a house, you want to invest, like 3 years is a minimum. Okay, 3 to 5 years is minimum for real estate investment. Okay, if you don't have that patience, if you say, hey, I want to like in and out, then don't do real estate. You might as well do currency trading, because that's really like in and out. But if you want to do a housing market, I just want to show you something that back then, when you have this one, average annual price percent change in home price. Look at back in 2016, we peaked, and then it dropped for the past 2 years, between 2016 to 2018. And people were panicking, saying that, oh my God, this is a recession. But is it? If you look at percentage, it's a 10% drop, 10 to 15%. Any financial market, if you have about 0 to 30%, that's a correction. That's not a recession. Okay, that's not a crisis. 0 to 30%, that's a very normal, healthy economic cycle. And rarely do we even have 30%. Okay, normally we see 10% and 15%, and that's it. That's basically, say, a bear market. You see 30 or more than 50%, then that's why you say, okay, it's a financial crisis. But if you look at this chart, you realize what I'm trying to tell you is be prepared. If you do any sort of investment and you're trying to hold it long term for more than 3 years, more than 5 years, sometimes you're not going to time the market correctly. Sometimes you buy at a high. But don't panic, because it's going to come back. As long as you do your due diligence, you're buying the right asset, you're getting a right house in the right location, you have a good risk-reward ratio, you plan ahead, then this kind of fluctuation is not going to affect you or affect your investment career. So just be prepared, knowing that anything you buy in terms of equity or housing, it's always going to fluctuate. So if it's 10%, 15%, it's normal. Okay, in any given years, it's normal. As long as you know what you're doing, then you'll be fine. Okay, so I just want to show you how I personally tied all these financial assets together so that you're not only looking at individual, because everything again is correlated. All right, so I think we're almost at the end of the UK election, pretty much at the end. So yeah, I guess Brexit is going to happen. One thing to be careful is if you are buying currencies, especially trading this kind of news, there's going to be a lot of buying rumors, stating the fact you might peak at 1.35. This might be the peak point, and you might see a correction. So anyway, if you're trying to trade the news live, you really need to have a good source of information. I never trade this kind of election. The only election that I ever traded was back in 2016, the US election. And that was because I follow it. I live in Canada. It's very close to US. The US economy has everything to do with the Canadian economy. We're so close to each other. And also that election with Donald Trump and Hillary Clinton was very entertained. You know, that's why I follow it all the time. And also the census at that time was that all the polls shows Trump was going to lose. And that's why it has a very, very good risk and reward ratio. Where for the UK election, pretty much all the census has showed that Boris Johnson, the Conservative Party, was going to win. And it was the result. He won. But we still have a very large movement. It's because he won more than what people predicted. Okay, it was actually a very, very big win for the Conservative Party tonight. So that's why we still see a big jump in a British pound. All right, so I'm just trying to tie everything together, give you a quick market update, and hope you learned something from here. Again, if you have any questions, feel free to let me know, and I'll be back. Thank you very much. Bye-bye.